Welcome to the CaresLink podcast. Today I have an amazing guest with me. She is a senior tax strategist at Taxtra. Holly is also coincidentally my sister. Holly, thank you so much for joining us on the podcast.
Thank you for having me.
So to start out, can you just give us a little bit about your background and how you got started in tax?
Absolutely, yeah. I have been in public accounting for about 6 years now. I started working here in Tampa, actually, at a mid-sized firm. And I was there for a few years and then kind of realized that I wanted to progress more out of just like a preparation role and more into a strategy and consulting role. So I ended up moving firms to a firm that specialized in tax strategy and worked there for a few years and then moved to the firm that I am at now, which specializes in tax strategy for medical professionals.
What does that mean that you specialize in tax strategy for like medical or healthcare professionals? How is that different?
It's different in a number of ways. So depending, everyone has a unique tax situation, but what we see a lot in healthcare medical professionals is they're largely high income individuals, oftentimes on a W-2 or 1099. And so they don't qualify for a lot of the normal strategies that you would see because there's income limitations. So it really takes a more specialized approach, a lot more time and attention to their situation, knowing different loopholes, to kind of get them the same level of tax savings that other industries benefit from. So that is what we specialize in, making a plan and working with medical professionals based on their unique situation in order to get them the most amount of tax saving possible.
Have you always done this sort of like strategic approach to tax? What's the difference between like maybe a tax preparer and someone who's more of a strategist?
So yeah, I have not always done it. In that first firm that I was at really did focus more on like the preparation. And it's a different approach, and not everybody needs tax strategy. Everyone's situation is different, and sometimes if you are just like a W-2 and you don't have a lot of complicated going on with your taxes and you're not paying a lot in taxes, preparation is exactly what you need. But for other people that are, in a higher net worth situation or making a lot of money running their own practice is another great example. You're getting killed in taxes if you don't have a proper strategy. So that's where the strategist or consultant comes in and helps you kind of realize all the different areas in the tax code that you can use to your advantage.
For someone unfamiliar with maybe the tax code or what it might look like for a high earner, what specific mistakes or like how does it break down? Like why specifically is working with clinicians or people in healthcare such an important thing?
I would say they don't necessarily always get the help that they need. Oftentimes I bet a lot of, the people that are listening to this or medical professionals that we see, they've been targeted often by like financial advisors that see them and know that they have the money to pay higher fees for advisement, but they're never really receiving strategies that are specific for their situation. So they're often getting targeted and not really being able to sit down and meet with someone that knows what they actually need or understands what they need to do to really lower their taxes or make the correct investments. So I would say just the understanding of the tax code and also like the willingness and the setup within a firm to have these plans, make these plans with your clients. Not every firm is structured like that to where you sit down and you make plans like a year out. You have those calls, you do the check-ins, throughout the year to make sure that everything is going according to plan. Not everyone is structured like that. And there's nothing wrong with other firms that are like that, but it is a unique approach, and it takes a unique approach to work with medical professionals in these situations.
So if like say there's some young clinicians or people maybe in school watching this, what would you say to them? When is an important time to start thinking about these things?
I would say it's never too early. But even like when you're in your residency and you don't have, that first full big job and that first complete paycheck yet, that you're striving for, plans, it's never too early to plan. Never too early. And planning even for retirement at that point. Because when your income is lower, you can be contributing to a Roth in a standard way, So there's different things that you can do when your income limits are lower than what you're anticipating post-residency. But also, like, knowing what types of jobs, you're looking to get out of residency. Will it be through a W-2? Will you be paid 1099? I'm assuming out of residency, not a lot of people are starting their own practices, but is that where you're going? And then the plans for each type of job avenue is a really great place to start.
This is actually a really topical conversation for me right now. I have a couple colleagues I was talking to this week whose income increased suddenly, and they're really not seeing any like meaningful change in their, quality of life, and maybe their paychecks are even dropping in like the actual sum. What would you say to maybe someone like that whose income has just increased suddenly? How should they think about that situation?
That's a perfect example of why you need a good tax strategist, because life changes. You get a big promotion, or you get a bonus, or you get you're out of residency and you get your first big job. And you need someone that can sit down with you and make a projection of what that's going to look like at the end of the year. What is that going to look like at tax time? How much are you going to owe? We see so many medical professionals that either they're too busy, they don't have the time and the energy, which is very understandable, but they don't want to deal with the tax situation. They'd rather just over withhold or pay in too much in estimates and not have to owe anything, or they'd rather get a refund at tax time, really. And so if you have a tax strategist, when you get that promotion, that can sit down with you and go over what this is going to look like for the next year, how much we're actually predicting your tax is going to be, then you can withhold the correct amount. You can know exactly what that looks like for you. You can know how much should really be coming in your paycheck. So all of those things is a great example of what we help our medical professionals with and what they should have, the type of treatment that you should be getting from your CPA if you're working with a strategist.
What's always been so interesting to me is that earning more money can actually make your tax situation worse and not better.
Not necessarily. It depends on how your outlook is on your tax situation too, and how your planning is. It's not making it more money is never a bad thing. And if you're planning correctly, that's more cash flow for your investments. And your investments, if you're doing this correctly, specifically like real estate is a great example of that, your investments are lowering your tax. So more cash flow is never bad. If you're not planning correctly, you will owe more in taxes and you are going to pay that, but you just have to plan correctly. More cash flow is never a bad thing.
Which is maybe why it's so important to work with a strategist.
Yes.
So you mentioned before a couple different kinds of clinicians you might work with. Maybe someone with a 1099 or doing contract work, someone with a W-2, or someone starting their own business. Could you run through a couple scenarios of how you might approach those situations differently, or different considerations for each of those?
Yeah. So I'll start with W-2. I feel like that and 1099 work is what we see the most. But for W-2s, that is probably the most challenging situation just right off the bat, because it's hardest to bring down a high W-2 income. One of two things that I'll touch on for W-2. Number one is make sure that you are withholding the right amount. You do not want to be over withholding, because in that sense, you're giving the government an interest-free loan that is your money. So you do not want to be over withholding, and you don't want to be under withholding. Both lead to tax surprises. One, you're getting money back that you could have already had and invested. In the other sense, you're going to owe money at the end of the year that you didn't think you would. So make sure your withholdings are correct. And then beyond that, the best strategy that we normally, not the best, but depending on your situation, one of the strategies we normally recommend for W-2 earners is real estate. short-term rentals is just, it's a great strategy. You have the cash flow normally from your job. You're investing in a property. You're renting it out for 7 days or less on average out of the year. If you're materially participating and following all the rules, which there are quite a few, that's a little bit probably too in the weeds for this episode. But if you're following all the rules, all of the loss that you create from that rental can offset your W-2 income. So that's a great strategy. We recommend it with tons of our clients. There's a lot of rules that go into it, but it's pretty easy for doctors and medical professionals to do most of the time. It's, passive income. We can create a paper loss with bonus depreciation this year. And it's a really easy passive income way to bring down your W-2 income. So that's for W-2s. For 1099s, that really comes down to how you're structuring that 1099 income, and then what deductions are you using? Are you tracking your deductions? Do you have something to bring that down? Do you need to be including withholdings in your 1099s? And if not, are you making an estimated payment so that you're not having a tax surprise at the end of the year? But for 1099s, most doctors, they struggle to track during the year, track their expenses, or even recognize what they should be deducting. And so that's what we help with a lot, is making sure that they know what is deductible. They're keeping track of it all year, so they're not stuck with this huge sum of income at the end of the year that they have to pay tax on. And then as far as private practices go, there's a lot of considerations there between entity structures, like how are you setting that up? Are you just an S Corp? Are you a single member LLC? Within the S Corp, there's paying yourself a reasonable salary, what that looks like. Do you have employees here? Are you keeping track of your deductions again? There's so many more write-offs that we can do when it's their own practice too. Are they using their cars for the business? We have home office expenses as well. So there's a lot to take into consideration there. Also, when you do have the 1099 or a Schedule C single member LLC or an S Corp, you can also be contributing to your retirement. So particularly for the S Corp, you can contribute to a 401k on the employer and employee side. So that's huge for a lot of the medical professionals that we have that own their own practices.
Is that a reason, if a physician or other healthcare professional were starting a private practice, is that a reason to consider an S Corp over another type of structure?
You could do that in a single member LLC too. There's different requirements based on the income that you make or what you're paying yourself if you're in an S Corp, but they should be doing it either way if they have a single member LLC or an S Corp.
If say there's someone listening to this podcast who is a high earner, a W-2 employee, and they're thinking about starting their own business, and they're just kind of wondering what the tax situation might look like with that transition, what would you advise someone? Maybe not advise on what to do with their business, but just what to expect if they're transitioning from a W-2 position to owning their own business.
They first and foremost expect to be much more involved in the tax side of things, whether you want to be or not. If you're going to run a successful business, any business owner knows this, the more involved you are, the better. And I think that presents a particular challenge for medical professionals because they're very separate things. You have the business side and then you have patients that you're taking care of, and it's really two jobs, and so I would say just be prepared that it is more work, but that's where, a strategist can come in and help as well. I would say there are so much more potential for tax savings when you are running your own business, though. There's so much more you can do, and there is a freedom in that. You're getting to use your money that you're making for exactly what you want to do, and you're building stuff, and you're building wealth, and you're building equity. And so I think it would be more rewarding as well. I don't own my own business, but I would hope to one day, and I think that would be a pretty fun spot to be. Tax-wise, entity setup is everything. How you're setting up your entity allows you to take, the deductions, specific deductions. I would say that is one of the biggest things that you should be considering, as well as tracking. Are you using, Excel a lot of the time? Really just does not cut it. Invest in QuickBooks. Just get it. It's worth it. So I would say tracking is going to save you every time, because if you're not, you're either missing out on deductions, you're paying more in tax, or you're going to give your financials, receipts, etc. to your accountant at the end of the year, and they're going to have to do more light work for you to kind of make it cohesive into a tax return, and you'll end up paying them more. So either way, you're saving money by tracking your deductions and having good financials.
Yeah, that makes sense. You mentioned you, of course, work with many healthcare professionals who do have private practice businesses. Do they ever bring you on in the process of forming their business, or do you just come in later? And do you wish that you had come on earlier?
No, we do a lot of formation with the clients too. We also do entity setup. So I have tons of clients where they are not in the correct entity, or they have a single member LLC and they really should be an S corp. And once you hit around like $60,000 of net profit, like you really should be in an S corp setup. Otherwise, you're getting killed in self-employment tax, and it's really just not the best setup for you. So we work a lot with practices that are going from being that single member LLC into an S corp setup. Sometimes I do wish they would have done that earlier, or we could have come into the business with them earlier and kind of helped get their books into a better place, or, they've missed out on years of deductions just because they didn't know. So yeah, there are definitely situations where I feel like we could have helped them by being on board earlier, but we also would say the majority of the clients that we deal with, we kind of help them transition into the correct entity setup that they need to be in.
So for W-2 or like regular employees who are high earners, you mentioned short-term real estate as a really important strategy, potentially, depending on your situation. Are there any like missed opportunities you frequently see in small healthcare businesses, like private practice? Like, is there any similar thing that you're consistently drawn to?
I wouldn't say so much as like a specific deduction. There are a lot of things that are missed, but I would say overall it's just not enough time spent on tracking and on like the specific setups. So the tracking and your books, like they'll say like, I know I had this expense over the years, or I didn't really track it, but I think I've been doing this, and we can't really work with that. So it's not necessarily one specific deduction that I see that is missed, but rather missing deductions in general. If that makes sense.
Yeah, that definitely makes sense. So outside of business, family or like life events also tend to impact tax strategy. Can you speak a little bit to that?
Absolutely, yeah. Having another kid is a huge one. You have child tax credits, and that's massively expensive too. So that's, again, something that I would definitely talk to a tax strategist about, and it's something that it's nice to have a tax strategist in your corner for. Also, promotions. We touched on that a little bit before, but the second you get a promotion or change a job, or you move from W-2 to starting your own practice, you should be sitting down with your tax strategist and talking about the implications of this. We do projections all the time for people that are, either getting a new job or they quit their old job or promotion, etc. And we can really make a plan for them. Also, moving is another one. We have a lot of medical professionals that either finish their residency and then they move to another state, and that drastically impacts your tax situation depending on if your state even has income tax. We have a lot of clients that are in California, and it's such a high tax rate for that state. So again, specific rules have to be in place for that. And then some also have like community property rules. So in that situation, it might be more or less beneficial for married filing joint versus married filing separate. That also comes into play a lot with medical professionals as far as their student loan debt, because when you're paying those loans back, your income is a really important factor. So we do like consultation on that as well, like what is the best situation for you, with your loans, with your payment plans. So yeah, all of that is really important stuff that you should be talking to your CPA or your tax strategist about, because it drastically changes your tax situation.
Yeah, absolutely. Any other like red flags people should be thinking about? Like say they're like, oh, I have a tax person, but I've never heard any of this. Anything people should be thinking of when working with tax professionals and when to seek a new one.
I think if you are a medical professional and you've never heard any of this, and not all firms do what we do. So your CPA could be great for what they're engaged to do, So I think if you haven't heard any of this, if all of this is new, or if you're just a medical professional that is getting killed in taxes every year, I think that's a red flag in and of itself. There are ways, if you have the cash flow, there are so many ways to lower your tax bill. So yeah, I would say that. I would say if you're reaching out to your CPA and hearing that there are no strategies for you, again, as long as you have the cash flow, there's a strategy. So I would say that is a red flag. If you're not hearing at all from your CPA until April or March, that's a red flag too. Especially for medical professionals, but for most, people in general, tax strategy is a year-long process. You need to be sitting down and meeting. We can't do anything for your 2025 taxes after 25 is gone. Not anything, but most things you can't do after 2025 is gone. So it's a year-long process, and it happens well before you're ever paying taxes. So if your CPA is not reaching out to you, or if you're reaching out to your CPA and they're not responding to you, or if they don't know the strategies that can really help your situation, I would say probably seek someone who can.
If you had to just pick one thing that you wish that healthcare professionals understood about taxes, like the most beneficial thing, what would it be?
This is probably a little bit of an unpopular opinion, or not the news that they're going to want to hear, but it works best and you'll save the most money when you treat it like a second job. The strategies don't work themselves. Your CPA can tell you everything in the world, give you a perfect outline, and it's still going to require work from the taxpayer. You have to be invested in your tax situation. So I would say treat it like a second job. Don't be scared of it. It's not scary. The tax code, make it work for you. It can work for you. There's a lot of gray area, and there is a lot of loopholes to be taken, and there's a lot of legal, very, very legal ways to save your money. It's your money, and make it work for you. So I would say don't be scared and invest in your tax situation. They will pay you back.
Yeah, absolutely. I'm just curious, how many times per year, how frequently do you meet with clients, particularly in healthcare?
We have a lot of clients in healthcare. So I would say the majority of our clients are either healthcare or real estate, and we normally try to get our healthcare clients invested in real estate. So it's kind of circular there. But times per year, that would be hard to say. I would say times per week as a firm. Oh, I would probably meet dozens. I would say it's a good amount. We do a lot of tax consulting calls. That's different during busy season, it slows down. We have some preparation to get through as well, but quite a few. I don't know that I have a direct number for you, but a lot.
So like say I come on to, or I, just partner with Taxstra for my tax needs. What could I expect in terms of like involvement, like face-to-face or, meetings? to help me with my strategy?
Yeah, absolutely.
Like how many times per year, say?
It depends on, again, what package you come on and choose with us. But if you're in like our top strategy package, you will meet with a CPA at a minimum of twice a year, and then you'll have check-ins, another 2 check-ins, so 4 meetings across the year that are like mandatory on our side given to you. You have access to us all year long for any questions that you need. So for like video call, phone call, messages, or meetings rather, and then access pretty much the entire year for any questions. If anything comes up, we are there for you to meet, talk, discuss, run projections. Is another big thing that we do for a lot of our medical professionals is projections, because there are so many life changes and you want to know, hey, I'm in the middle of the year. Am I still good on my tax situation? You know, my short-term real estate investment is at this point of income in the year. How is that doing based on what we projected earlier in the year? Am I still on track? So the projections are another big thing that we do, and we'll discuss those in our calls that we have with our clients.
Is there any advice you'd like to leave listeners with?
Taxes can be fun. And it's a lot easier to save money that you've already made than make more money. This money is yours. You have worked hard for it. You have earned it. It is your money. So keep as much of it as you can in a legal way. You know, it's yours. Don't be scared of it. It can be fun. And, you know, you're building equity. You're building wealth. There's so many great ways, like tax-wise, you can set up your kids well. You know, there's so many different things that you can do where you're using your money to give back to future generations. And you can do whatever you want with your money. The point is you have it to do what you want to do with it. Yeah, you know, it's your choice.
Yeah.
So that's what I would say. It's your money. You should be able to do what you would like to do with it. And yeah, build wealth, make it fun. It is fun.
Yeah, that's a good message.
Yeah.
Where can people learn more about your work at Taxtra?
You can find us online. It's taxtra.com, or through our Instagram. It's Taxtra Accounting. Yeah, we are also on LinkedIn. But I would say through Instagram and on our website. Our website, we do have a free discovery call. So if anyone wants to book with us, it's 30 minutes. You'll meet with our very lovely sales lady who is very educated on all of tax information. And so she can point you in the right direction and really see, you know, based on what your situation, how much we can help you.
Yeah.
So,
all right. Well, thank you so much. This has been very helpful.
of course, thank you.